Hello and welcome to today's morning report on Monday the 17th of November with me, Richard Perry, market analyst at Handtech Markets. These European markets have started fairly disappointingly, and that's been driven by this disappointing Japanese Q3 GDP data that fell an annualized 1.6%. That was well below the 2.1% of growth that had been anticipated. That puts Japan back into recession, as it's the second quarter in a row of negative growth. And asks several serious questions of Shinzo Abe and Abenomics. Certainly, it now seemingly would mean that the corporate, the sales tax rate, the sales tax hike will be kicked into the long grass now. Theoretically, I suppose it means that it opens the way for probably more easing by the Bank of Japan. But certainly, the reaction on the Nikkei 225, which fell 3% overnight, certainly doesn't suggest that, because normally you'd argue that bad news is good news in the fact that it would engage more monetary easing, but certainly the reaction has been negative so far, and that's drifted through into the European markets. And also sentiment has sort of gradually turned around now. I mean, early morning, the dollar was once more under pressure after Friday afternoon's significant sell-off on the dollar index. And that has sort of now turned around. That dollar index fell sharply on Friday afternoon, and again this morning continued to decline. But that has engaged a bit of a rebound since in the last few hours, anyway. And that's certainly turned around because the euro was up, the sterling was up against the dollar, and certainly that move is now gradually being turned around. As the you'd argue there's a move sort of more towards the safety of the dollar once again, and that's what we've seen early this morning, and that sort of moves you to what we've got in the day ahead. There's not a huge amount. You've got the US industrial production is the only real economic data that's being announced. That's at 2:15, forecast to come in at 0.2, so slightly down from 1.0% last month. And also we've got the capacity utilization, which comes out as part of that data as well, and that's forecast to stay around about flat at 79.3. So that capacity utilization continues to remain solid, on an increasing trend, but certainly not up in the levels that we saw in the late 2000s. But we'll see how that one goes this afternoon. And then this afternoon we've also got a load of ECB speakers, Draghi being the main one at 2 o'clock, and any sort of alluding to monetary policy could well have an impact on, you'd imagine, on the euro and sort of DAX and CAC as well. So that takes me to my chart of the day, which is the Aussie dollar. Now, I wrote the Aussie dollar comment this morning on the premise that it actually had broken out above the 87.60 mark, and it was looking fairly strong. But that, as I said, that turnaround in the dollar in the last couple of hours has sharply dragged the Aussie dollar back lower again. And this is on the hourly chart. That was that 87.60 key resistance. That is a big level actually on the Aussie dollar, but the sharp move back down below now. If I zoom in slightly there, you've got also a small prospect of a top pattern there, so you could argue that could well be coming in the very near term back down towards certainly a test of the initial support, which is that sort of mini breakout high, although it's not particularly convincing, but still 87.15 is around about that level. But it could well have a correction, as I said, on sort of arguably a top pattern very near term back towards these lows again, which again is a key level sort of on the intraday chart around about that 686. Sorry, using my eyes there, 86.80 level. Yeah, we could see a drop back towards that, and possibly even a retest of that key reaction low on Friday of the 86.47. That key reaction low, sort of, that's a big outside day on Friday, but certainly the outlook looked to be moving positive, looking at these momentum indicators. But you would argue that the RSI is just unwound basically back towards that 50 level again, and MACD still remains in negative territory, and also the stochastics are just rolling over as this move today has corrected. But obviously this is an intraday move and we'll see how it goes, but at the moment it certainly looks like the dollar is fighting back against the Aussie, and it's dragged it back below that 87.60 mark, so you could argue that's a bit of a line in the sand really. So anything that remains under that 87.60 level would sort of be more negative on the rate, but a move and a hold above the 87.60 mark on this Aussie dollar, you would argue again being more positive on the outlook. So I wish you good luck in your trading on Aussie dollar today. Certainly looks like, if you look on these hourly momentum indicators, the MACD lines have turned over and given a bit of a crossover sell signal as well, interestingly, and the RSI is also falling quite sharply, stochastics falling quite sharply, having given also a bearish divergence. So yeah, this looks like this momentum in the Aussie dollar has run out of steam, certainly near term. So I wish you good luck in your trading today, and I will speak to you later. Thank you.